Hi guys, this is Mosh. Today is going to be another portfolio update on Trading 212. A lot has been happening these last 2 weeks and my portfolio has taken a bit of a hit, but it's not as bad as I've seen for other people's. The reason is diversification. I'm going to talk about the importance of diversification before jumping into my portfolio. What is diversification? Diversification is not investing in one industry or a certain type of stock. So you're not putting all your money into one basket. For example, if you have all your stocks in the energy sector and the energy sector gets hit with bad news or there's a major disaster that's happening, all your stocks will go down. So what you want to do is spread your risk, and the way you do that is by diversifying your portfolio. Doesn't mean you have to buy 100, 200 different stocks. You can buy 5 or 6 stocks as long as it's in different areas. Before I show you my portfolio, I really want to tell you about this new app that I'm using. It's called Invest Engine. It's actually for those that are looking for passive income. So what this company does is they invest your money and they spread it across various different ETFs, and you can see exactly where those investments are going, and they charge an incredibly low fee of 0.25%, which is really low for this industry. If you see my previous videos, you know I'm all about investing for growth stocks, but obviously you need that passive income just as a safety net. And the best thing about it is they're actually giving away £50 for free if you invest a minimum of £100. Use my link below. Just be aware you have to keep the £100 in there for a minimum of 12 months, or you have to give them the £50 bonus back. In my next video, I'm going to do a full review of Invest Engine, so keep an eye out for that. Okay, let's jump into the portfolio and see what has been happening. As you can see, my portfolio is about £22,000. Over the last 2 weeks, I've lost about £2,000 off my portfolio. But if you look at the percentage, I'm still up 46%. I think at one point it was around 58 to 60%. The reason why it's still up is because I have a diversified portfolio. Now you can also see the invested amount has gone up, and I told you in the last video I've used up my allowance. One thing I didn't realize is if you sell for profit and reinvest that money, adds up to your invested amount figure. So let's see what has happened. So Artius Acquisition Corp is first on the list. They are merging with Origin Materials, which I think is a really great company. So this is something that I'm going to hold on until the merger's taking place. And for me, it's a long-term one. I have lost about 300% on Fuelcell. I bought it at $5, roughly around there. You can see it's only up 174%. But for me, Fuelcell is a long-term play. This is something I'm holding for 5-10 years time at least. Next one on the list is IAG. It's up 118%. At one point, it was up 126%. This is why diversification is important. This is a cyclical stock. What that means is there's certain industries or companies that go with the economy. If the economy is down, that industry is down. For example, banking. Airlines is another one, especially during this pandemic. And if we jump into it, as you can see, the highest it got to was about £2.20, but I'm going to hold on, and my exit price on this is about £3.30. Next on the list is iShares Global Clean Energy ETF. Now it has plummeted down because this is invested in the clean energy sector, and a lot of them are growth stocks. Growth stocks have taken the biggest hit because the money has gone out of the growth stocks and more into value stocks and the cyclical stocks. So if we go into this, you can see at its peak, it was around £14 and it's gone just over £9 now. So for me, I don't see it as a bad thing. iShares Global Clean Energy ETF for me is always a long-term play. I'm going to hold it 10-15 years. The future is green. There's no denying that. So for me, as soon as I get my paycheck, I'm buying more of these shares. Okay, the next one I've got on the list is AONE. Again, it's another SPAC. It's taken a bit of hit, but it's still in the green at around 4%. They have announced they're merging with a 3D company, and I really like it. So even when the merger takes place, I'm going to hold this. For me, this has become a long-term hold now. And again, it diversifies my portfolio. So it gives me some exposure to the 3D printing market. Next on the list is Palantir. I've been waiting ages to buy this. It is slightly down, but I think I've caught it at a good price. If it keeps on going any lower, I'm going to keep on buying and buying. Initially at its peak around $39, $40, for me that was far too expensive. Once it started taking the dip, I started buying in. The way I see dips is just as a buying opportunity. I don't think, oh no, it's going to affect my portfolio, or I'm going to lose money, because everything generally on my ISA account is for long-term holding. I'm still holding Pineapple Power Corp. As I said from the last video, I'm not selling this SPAC. until they announce a merger. And if the company is interested, I'm going to hold it. If it's not, I'm going to hopefully sell for a profit. Next on the list is a new one. It's Plug Power. As you can see, it's down 24%. I've been waiting to buy this for ages, but before it's too expensive. So if we look at the graph, you can see at its peak, it was around just over $70. And now it's at $38. I went in, which I thought was a dip, but it actually wasn't the dip, around $48. But I'm going to buy more of this because I believe the future is green. I'm still holding Powerhouse. Again, it's only a small holding. I went back into Senvion. It's a wind turbine maker and they went solvent. I initially had it at 0.08 and I think I had like 8,000 shares. I sold it for a profit. At its peak, it went to around 0.89 euros, something like that. And I've gone back into it. And the reason why I've gone back into it is because of a technical play. For me, this made a nice triangle. I thought it was going to emerge from the upside, but it's gone below that. But again, it's only a very, very small holding. So I don't mind holding it even for a year and seeing what happens with it. As you probably noticed, I've got Rolls-Royce missing. I actually sold that for a profit at 125. I bought it just under £1. Now I had a limit order in there. Limit order is basically an automatic sell when it gets to a certain price. So it sold at 125 and I took a profit and I reinvested that money buying Palantir and a few other things. Lastly on the list is Sunrun. Again, it's down 15%. This is one that I've been wanting to buy for ages. And I think it is a very healthy company. It's a profitable company. For me, it has a lot of upside potential. I went in at about $65, but again, at the end of the month, I'm going to buy more because at its height, it was around $95. So it's taken a big battering due to the last 2 weeks sell-off of growth stocks. But I'm a big believer in this and I'll keep on investing and putting more and more money into this company. Thank you to everyone that have been using my referral link. A lot of people have been getting free shares. If you want a free share worth up to £100, all you have to do is open a Trading 212 account, deposit £1 and they'll give you a free share. Also, Free Trade are giving a free share worth up to £200 and all you have to do is open up an account, deposit £1 and you'll get your share within 7 to 10 days. Use my link below. If you haven't done that, make sure you go do it. Also remember to check out Invest Engine who are offering you £50 if you deposit £100. Use my link below.